There we go. All right. Hey, everybody. Thanks for coming out to FNL Futures Networks Live opening bell sequence. What we do is we OODA Loop our charts and build a trade plan for the day. Our goal here is not to predict where the price is going to go, but to have a plan for when it goes there. If the price goes up, we want to have a plan. If the price goes down, we want to have a plan. And as important, if the price chops, we need to know where to stay out of price action. Trading futures does contain risk, and only risk capital should be used. So there's a disclaimer on the screen. I'd highly recommend maybe you take a screenshot of it or a picture with your phone. Please only use risk capital. If you have a trade you're working on, get a sample size, get a track record, build a track record, prove to yourself that you can do it, that it's repeatable. And that's kind of our goal here, is to develop trades that are repeatable and not just clicking buttons and hoping and praying that the price goes our way. So how are we doing this morning, Travis?
Splendid. How about yourself, Rob?
Doing good. Enjoyed time off yesterday, got some work done, and did some little bit of work with Titus on our fib levels. That was fun. So
Cool.
Yeah, moving right along. We have Anthony Crudelli coming in next Monday at 11 a.m. Eastern. So if anybody has questions, be sure you please email them to info@futuresnetworks.com. Expect a phone call from me, and we'll talk about it, and we'll get you. I'd like to introduce you to in session. So please have a mic. If you don't have a mic or you don't want to get on, I get that too. Either myself or Travis can ask a question. But we'd love to get some more questions. Right now, we're a little thin on questions other than ones I've come up with. So if I could get some emails, that would be great. Remember, this is for you guys. So, all right, let's start going through the charts. 5-minute chart. Do a quick review here, and then we'll start going through our time frames.
All right. So 5-minute chart, really since 4 a.m. or so, slightly down. But is that a downtrend, or is that a pullback from a longer uptrend? One of the best ways to answer that is to scrunch this 5 a little bit. And it starts to look a lot more like the latter than it does a downtrend. Because as you can see, we've been up. So you could make the case that a deep retracement was needed, whether we're going to continue or not. The market can't continue that just unusually up pattern forever.
Yeah, it looks like we've been riding the 89 period moving average. Now we've broken through that. Now we're using the 200. And if this 200 doesn't hold on the 5-minute chart, then I have to start thinking, okay, maybe I should be looking short. And we'll start going through some levels that if we start breaking. For me, if we get below 37.20, which I see you have a nice big level there, probably from the daily.
Yes.
If we can use that, possibly. I might still take one more long if we see a support level there at 37.20. I might consider going long, even though we're below the 200, but we would be at a key level where we've seen it used as support back at 2 or 3 o'clock this morning. So that'll be kind of a tough one, though, because we'll be below the 200 at that point.
Right. I really like long from where we're at now. If this decides to push up now, that's very, very, I guess, clean. I'm just happy with the trend again. Yep. I might like to see a new higher high and a retracement before I'm too excited to trade, depending on what it looks like on its way. But
I have a feeling we'll find out here at opening bell, huh?
Mm-hmm.
Most likely the price is going to push up, maybe get us up to a higher high around 37.45, or we're going to drop down below that 200 and might be operating down today. But that's why we want to wait for opening bell before we really start jumping on stuff. When we start getting close to opening bell like we are now, it's only 15 minutes away. So I'm a little hesitant on trying to jump on anything and try to fill a trade in 5 or 10 minutes. Because we know how opening bell can be a little emotional.
A lot of times the days where everybody says, oh, it's obviously going up today, are the days you get one big red candle for 30 to 50 points or so. It's like, well, everybody was wrong.
Yeah, exactly. All right, let's head over to the daily.
Let's do it.
We talked a little bit about this gap we had last night and how, from what I've seen, I don't worry about gaps being filled until we start getting to the gap. I think everybody has to come up with their own. If they want to trade to a gap, fine, trade to a gap. But me personally, I'm cognizant that they're there, but I'm not necessarily altering my trading strategy around a gap.
I like it. Part of that could have to do with the holiday as well. We talked about this morning. We did have a 3-day weekend, so
Yep.
they did not include yesterday, and part of yesterday's price action was part of that gap. So it just has to go with look at it yourself if you'd like to.
Yep. So where might we be thinking, looking back to our left, and we've obviously been in a downtrend for quite a while. That move there at the bottom really looks to me like, a nice pullback. So we could be in a pullback right now. So what kind of levels would we be looking at if the price were to continue up?
3,800. I mean, I know it's a long way up, but it's a key level we had left over from a year ago that we used again. We went to it once, and then we came back and turned around at that level to push down. So very common to see us wick to that level.
Which is right about where your channel, the part of your blow-off channel would be, right? Be right about there. So if we do see a move up today, we might look at that as being a top target. I would say also, maybe if I look to my left, some of those red candles back around the 13th and 14th, we have this area right here. I mean, it's kind of stretching it really, but this area right here, and you can see we already came up to it one time. So I might look at that and say, okay, if we can break above that and make a new higher high, now it might give me a lot more confidence to head up to 3,800 versus just trading. So making a new higher high after opening bell would also be pretty important to me to continue the trend. So that would take us, above our current wick. So if we can get above that current wick, I'm gonna have a lot more confidence that we're going to continue to go up. How about on the downside?
37.18 or 37.20, that big daily key level there.
Yeah.
Got hit a couple times this morning. Go ahead.
Yep. And then we also have below that would be our next level. So let's write down those numbers. On the downside would be 37. What was that? 14 or 15?
18.
18. So 37.18. And then below that would be probably, I would say down here at the bottom, where you have a little level already.
Whoop, I messed you up.
That's all right.
You might call that 37.20.
Okay. So 37.20 and then down to 37. What's this level here?
36.80 was the bottom of it.
Okay.
The bottom of the box.
So 37.20, 36.80
so
might be the next two levels we get below.
Full transparency, that box comes from bodies to wicks on March 8th of last year. Just so it's not a Houdini box and nobody's like, oh, well, those magical numbers that we hit. So it's from the market. Bodies to wicks area shows a possible support level that oftentimes becomes resistance instead, right? So my biggest problem with calling it a support level is that I don't want people to see the market going down to it and say, oh, it has to turn around. Let me set all of my long orders here to make sure it goes back up. Because what's very, very common in this case is to see a support level, but on our way down, we don't use it as support, maybe a little rejection, breakthrough, but we come back and use that level as resistance to push down. And that is the trade that we like to look for because it matches a downtrend with the key level rather than fighting a key level against the trend.
Agreed. So if I just look at this chart, really the price to me, if I just say, what does the price look like it wants to do? It wants to push up, it wants to push up. But I'm not going to sit here and say, oh, I'm only going to look long today based off of this. I want to wait, let the price action tell me what it wants to do. Like Canny 4 says, be dumb, follow price. So we're going to let the price action tell us what it wants to do. Anything else on the daily? Or anybody in chat or in session want to throw anything out there? Okay, let's go to the 4 hour. 240 minute.
Shows a little bit of how last week or two has just been strong down.
Now, when I get to this chart, it almost looks like, hey, wow, what a great spot for a turnaround after we pulled back on the move, from June 16th there to make a lower low, went sideways a little bit, did not make a lower low. Now we've got a nice little retracement here on something that might want to actually turn around right here and head back down. I mean, that's probably a 618 right there, I would think. Pretty close to. Just guessing. So we're kind of right in the middle of everything, but that looks to me like it's a pretty good retracement, 50%.
And it's right at the 21 as well on the 240.
Yep. So it's going to be interesting to see what happens in terms of this price if it wants to get below the 21 on this 4 hour and start heading back down to 36.60 or so, or if it wants to push back up and have a bigger retracement on that move from June 16th or so, where he just came straight down.
I agree.
What do you think? Yeah.
A big, I guess you could call it a pivotal zone, a decision zone, to where if we push down, it looks like the downtrend is carrying out from the retracement. And if we push up and make a new high on the day, it's the exact opposite of that coin, where it looks like we're actually breaking above new highs and might be starting a recovery type trend, to where it feels like a lot of consolidation here. I know the daily kind of told me that, and so do the smaller charts in terms of being between EMAs, but how we've kind of pushed down and then again, and is it a retracement or is it a recovery trend back up? And that's where, like Rob's saying, just got to wait on the day to show us.
Yep, exactly. All right, hour chart. So the 1 hour, now we're starting to see that little bit of sideways movement. Again, same thing. I mean, are we looking at that? Right on top of the EMAs now. So I'm not really super stoked on either direction at this right now, looking at this chart especially.
More sold on long than short because of this key level and us being above it.
Yeah. So on the Crudelli, what Crudelli talked about, we are not at the 50% mark yet, though. Hold on here. I have to get on my. So we are at right now. So I measure the top, the high and the low on the Bollinger, 50%. Oh, we're at it right now. So if I measure the high on the Bollinger to the low, so the high is at, this is a three deviation, 20 period. The high would be at 39.16 of the Bollinger. The low would be at 35.57. What he talks about is 50% of that. When we get above 50%, then we can start looking at the price possibly reversing. We're at 50% right now, like literally at it. Randy, do you see what I'm saying on the Bollingers?
Oh yeah.
You have a three period 20 deviation or 20 period 3 deviation. 50% of that is where we're at right now. You take the high of the Bollinger, the low of the Bollinger, where the mouse opened up, and right now we're at 50%. And he talks about it in one of his videos. And I think Dean's going to play that video tonight, folks.
Okay. So that's the hour chart you're looking at, Rob?
Yeah, the 60 minute. He does that on the 60. And that was that video he did, I think, a week ago, last Sunday. So we're at that spot right now.
That's a key one. I like that. I like 50 and 100. It keeps things simple.
Yep. So we're at a pivot point right now, according to Mr. Anthony Crudelli, in terms of the price wanting to go back up, or this is kind of where we might stop and see a price go back down. So it's basically a reversal. So pretty key right here, pretty key. And you have it actually, Travis, on yours. It's pretty close, right? There to there. And then you take half of it, you take your Bollinger or your fib tool, and half of that. So what he looks for on a reversal. So the price has been coming down, right? Now it's starting to go back up. So the reversal would be if it gets above here and continues to move up, then we could be seeing the price reversing, making a new higher high here. And then we might have start having targets up around 4,000. But until it does that, what he talks about is, hey, okay, until we start operating above that 50% mark, we should probably still be thinking short until it starts really operating above that. And we're right at it right now. So I would recommend folks go check out that video if you're interested in learning about reversals. He goes through it pretty cleanly. In fact, we could even show it if you want it later. See how the price action is. We also have to do our, FNL OB30 trade. So that sometimes takes up a little time.
You got a 10 o'clock announcement. So probably between 9 and 10 would be a good time to show that.
Yeah. Yeah. Why don't we show that between 9 and 10 today? So, all right. Anything you want to talk about here on the 61-hour chart, Travis?
Not necessarily. We're still under both long-term EMAs. So even though we do have an uptrend on the morning, the longer-term charts tell us we're still in a downtrend.
Yep. All right, let's go to our 15-minute chart.
That's the first time we're on the other side of both the same EMAs, the 89 and 200. So the 15 is the first time in which, relatively speaking, we're in an uptrend, right? We've broken back through. Looks a little emotional, but we do have a couple of retracements.
Yeah, and this is when I start having a little conflicting, when my charts start conflicting a little bit. The longer term ones are kind of saying down. Now as we get shorter term, they're saying up. I have to really be careful. I have to kind of watch myself here and make sure that I'm trading in the right direction. And if I'm not sure what direction, then I have to focus on what my position. I have to make sure that I follow my set of rules. So right now I would be looking long on this 15-minute chart because we're above the 200 and the 89. But in the back of my mind, I still have to say, hey, look, I can't get too stuck to a long here if this price does decide to drop. Can't be too stuck on a long. Anything to add?
Not unlikely that we pull back to the same key level again to push up. So I can't get too stuck on short until we actually break through that 3720 level. It's been a very heavy daily level. You can see we came back and retested it overnight. It's likely that we might use that again at some point today. So if I am trading short, I'm going to use that 3720 level as headroom in a short trade. Because of the likelihood of us turning around there to head back long, I might take a step back. And if we break through the level, sure, I'll get back in the short trend. But I'm going to let it test that level and back up to see who wins. I don't want to be in a trade while that key level is fighting a downtrend, if you will. I want to just let everything be going the same direction.
So basically I said, I got to be careful of being too stuck on long. You said, got to be careful of being stuck on short. We're really saying the same thing. Got to let the price action tell us which way it wants to go this morning.
Right. If it goes up, I'm dead set long. I'm already kind of biased long, don't get me wrong. I just know that this market could easily push down, and then we're going to the 5-minute next. You want to go ahead and go there?
Yeah, let's go to the 5-minute.
Perfect.
Yeah,
so you see on the 5-minute, we're kind of breaking down through EMAs. We're under the 89 and above the 200, so that tells me we could easily turn around here and push down. If we do push down here, I'm going to be really weary of breaking that 3720 level because that's the big daily level. But right now, it seems like we're making a higher low, trying to use the top of this level to push up. I'm really heavily long biased right now. Just is what it is. I might have an order back at the 200 where I can get my stops if I'm scaling in under 25 unless I'm using an OB range. But overall, I think it's very likely to push up. Whether it pulls back to the 200 before then or not is up to the market. But I would want to allow it to do that, so I don't get stopped out by a quick wick back against me. I want to at least clear the 200, if not this double bar at 25.
Yep, and here we are. We're in our
10 seconds.
Yep, we're in our trade, or in our final candle, our 30-second candle. Or wait, no, we got 10 seconds.
Yeah, till opening bell. Now it's opening bell.
Yep. Now we're in our 30-second candle. So we'll get the high and the low from this, and we'll do our FNL OB30 trade where we look to gather momentum out of opening bell. We're not trying to predict which way we think the trade's going to go, but what we want to do is get in a trade At the top, we go long of the 30-second candle. At the bottom, we go short, and we try to stay out of chop, but chop happens. So, all right. So long out the top, short out the bottom, and there we go. As you can see, Travis has the numbers. So I have 37.39 on the top. You guys just confirm this with me, and 37.35 on the bottom. Wow, right on the.
Yeah, exactly 4 points on the number.
Yeah, right on the dot. No fractions today.
I had an account set up. I swapped to a new one, and it's got a 1 limit max on my contracts, and I forgot that. I had made it a long time ago. I named it Sim OB Trading. I forgot it was going to be a forced OB trade for one contract.
If you were using a 2-point stop, you would have been knocked out of it right now. So go ahead and just flatten it and start again. Yeah, just and then flatten, start again. And we're back in. So we got chopped up a little there at the start. And come on, go up. We're in again. Out the top.
I just missed getting in. I got an error because it went through my order as I clicked it in. Oh well.
Yep. See if it comes back down and retest for you. Get you back in. I did get in with mine, so I'm trying something a little different this time. For the last couple months, I've been getting out of my first contract at 4 points. Now I'm going for the next month or so. I'm going to get out of 2 of my contracts at 4 points, and then 1 of my contracts at 8. And then I have my final contract at 12, which is typically a runner. So I just got out of 2 of my contracts at 4 points.
I kind of like that, not trying to do too much and just.
Yeah. So why don't we do this? Since I'm in the trade, we'll go ahead and I'll share my screen.
Yeah, go ahead.
And then if you get back in, then we can share yours. There we go. So 4 contract trade. We did get chopped up on the first one. So let's put that in. So we have a -8. We have a +4 on one contract. Here, let's just do this. Let's just do a +4. -8, +4, +4. Now we have 2 contracts left. So this one is going to be a +8. And this one would be a +12, but we will probably make that into a runner. Now, what do you guys think about, and remember folks, we're testing this. We're going to be testing this for a little while. Moving this up to a scratch now. So I don't take a -4 on this one. Randy or Travis, what do you guys think about moving this stop up now? Remember, I have to be consistent because I'm out of 2 of my contracts.
Right. I say you've more than paid for the trade, so you can keep a little more risk on.
Well, no, I'm scratch right now. No, I'm scratch.
Yeah. Yeah, you would scratch. Yeah, I don't think I would scratch totally, but you know, we'll.
For the day I would scratch, but the trade is paid for. Yes, correct.
Right. That's what I mean. You know?
Okay.
Yeah, I'd like to see it hit the pay line again. It got me in when it came back, and it's having trouble hitting it again.
So what do you think, Travis? Is this a spot where when you fill on 2 of your contracts, because I know you do this, do you move your stop up now to a scratch level, or when I say scratch, these final 2 contracts?
I don't, because of how likely it is to come back to the OB range. Once we're like 5 to 10 points away, hopefully 8, 10, 12 points away, then I'll start to move my stop. But right now, I like to scale back into that trade over and over with my entry because I've seen how often we come back to the entry point and push back forward 4 points. So I feel like I'm so much more likely to stop and hit those stops if I move them, especially ahead of my entry. I might move one of them and then leave the other, but that gets more complicated.
Yeah, and I missed doing that. I wanted to scale back in here, and I missed it.
Hit twice.
Yeah.
I scaled back in, and then it came back and hit me again without stopping you out. So you might have had 3 sets of trades.
Yeah,
and actually,
yeah.
was going to say it came back, picked me up, kissed the 4, and then came back to my entry again, and now it's trying to fill. So I haven't filled the trade yet,
Yeah.
but it kissed the first fill, came back to the entry point again. So if you had filled, you'd have been right back in.
Yeah. Gotcha. So I meant to scale back in here, but I had it on 4. I didn't want to get back in on 4 contracts. I want to get back in on 2 contracts. So I was going to do the same trade, but with 2 contracts instead of 4. So, but that's okay. Could have a good day of trading today, folks. Could have a good day of trading. There we go. So there's
All right.
so there's a +8 on that one. Now we've got our +12. So I'm going to let you go ahead. You got a trade going, Travis?
Yeah.
Perfect. Why don't you go ahead and share?
Sure.
There we go.
So, like we said, we scaled in right at the top of the OB range. Let me go put that box on all my charts so it shows.
Yeah, folks were wondering, wow, Rob's charts didn't look like mine. You saw me on my 30-second chart. I'm doing what Travis is doing right now, and that is putting on my range, and then I'll transfer it to my 5-minute chart.
So now we have hit the high of the morning. If somebody had multiple contracts on this, definitely a really good spot to scale out, depending on if you took, whether it's an OB range trade or just a regular trade that you're scaling out of. Seeing a triple tap there is a good place to say, either A, I might scale out of this trade, or B, because the move's already been made, I might squeeze my stop and say, even if I lose 2 points here, who cares, because it made its whole move from where I got into that trade, right? So asking it to keep going, is it likely to keep going? Sure. But it kind of goes to how much breathing room I want to give it. If I was up 10, 12 points in this trade and then lost 3 on it, and it turned around right at the top of the mark where the high was, it's like the market did exactly what it was supposed to do, and I didn't take advantage of it. So in a sense, I want to be able to capitalize on a trade if I did get into this trade as it moved forward, either scale out or, again, maybe squeeze your stop a little bit. And that's my decision. When I say I would do this, I would do that, I'm not saying for somebody else to. I'm just kind of giving my own 2 cents there so somebody could go test that and say, is this my zone? Is that what I want to do over time? But
Yep.
We kind of talked this morning, like, don't trust us, prove it.
Yeah, don't trust us, prove it to yourself. There we go. So I just filled for 12 and I'm out of the trade now. I did not have a runner. Part of that was what Travis was just talking about.
Yeah, I just went to the 60 and moved my runner up to the 50-period moving average.
But I also was transferring a level and I forgot to move my runner. So there's that.
Yeah,
full transparency. I forgot.
Yeah, I know. I was not thinking too, and that could have been my last one, but
that's all right. That's all right. That's still a good trade this morning. So we'll do the math here in a second.
So I'm setting up a trailing stop on this trade in case I walk away. What this trailing stop says, the way it's laid out, is that basically if I hit 15 points positive, then it will lock in 10 points behind me, which is 5 points. So I'm already right there on my trade. If I hit 30 points positive, we'll lock in 20. And if from 30 we go to 40 points positive, we'll lock in 30, but then it will start to trail. Every time the market's, we'll say it's 13 points ahead of my trade, my stop will teleport 10 behind it. Frequency is less important. More or less, I have a 10-point trailing stop. The frequency delays that trailing stop, so I give it a little more breathing room. It's just something that I've started liking over time. So now I have that trailing stop applied. If I walked away, it should move a lot of times. So one thing to keep in mind that we don't often talk about, the same way if you apply a strategy to your trade, it doesn't apply to your entry point. It applies to where the market is, right? Same thing on a trailing stop. So it didn't apply when I said 15 points positive, I'm going to lock in 10. That didn't apply from my entry. So what you'll see is if we go 15 points up from wherever we were when I applied that stop is when it will start to move.
That's good to know. Yeah.
I was wondering why mine didn't pick up one day when that happened. And it was because I applied it late. I was already way up in the trade, and I thought for sure, I went to lunch, thought for sure it picked up, came back, come to find out I stopped out on a trade that was every bit of 20 points positive. It was like, well, oh well.
Yeah.
Lesson learned. So you see, I just moved that gain out of the way. We'll let my stop take it. If I myself want to trail this stop, I can. It does not change that it's going to pick up, meaning I don't cancel this trailing stop by moving it up or down. I think sometimes people, they put on too tight of a trailing stop. They say, oh no, I need that out of the way. They move their stop down thinking they canceled it. And as soon as the market moves, their stop goes right back up and they're out of the trade. I've done it to myself.
Oh yeah.
Accidentally put on a 3-point trailing stop instead of a bigger one, and then you're just instantly out of the trade. The way to cancel that stop would be to actually right click on it, pull up your stop, auto trail, and then where it says enabled with a check mark, you click that and it'll uncheck it. As far as I know, that's the only way to cancel the trailing stop without canceling your trade. Just a thought there. So moving your stop out of the way does not keep it from trailing.
And, let's also remember that trailing stops are not the end all, right? I think we get in this, sometimes people get in this fascination of a trailing stop and they still don't have their foundation really set or their trade that they're really looking for. And they start to do too much too early, myself included,
I agree. I know early on in trailing stops, that was my biggest thing is I thought, like you're saying, every single trade I took, I wanted to put on the moon and then trail the stop. And I had to prove to myself that I was better at that than I was with risk management. What I find out was early on I wasn't. I had to define situations from which I would use a trailing stop. And if I'm ever using a trailing stop, I can pretty comfortably say I'm always scaling out of a trade. Because if I cannot have more contracts to extend my risk management, I'm either taking my profit or my stop the way it sits. And that's something. Go ahead.
There's nothing wrong with taking your points and then looking to reset yourself and get in another trade.
The longer I trade, the more I trade like that and just keep it simple because it's more repeatable. Yeah. And one thing that I really like to ask myself is not only, I know we talked last time, if today showed up tomorrow, would you take the same trades? Yeah. I mean, we would want to. But another thing I ask myself, if this trade I'm taking, well, I guess bottom line, let me start over. Money at a certain point starts to matter. And if you don't know your zone well enough, there's a point you're going to hit where the money you're trading for will outweigh your trade zone. So my goal is to literally ask myself, if I'm on one contract, would I take the same trade? If I'm on 10 contracts, if I'm on 100 contracts, if I was trading a 1,000 lot trade, if you want to sound like the big boys, right? But if I was taking a 1,000 lot trade, would I make the same decision? If I had a 6-figure stop on my stop, would I be able to look at this confidently and say, that's what I do here? Or would every point it goes in my direction eat me up until I say, I'm taking my profit at 2 points or whatever the number is where you just look at it and run away with the money, which then turns your risk management upside down, your plan's not followed, and your track record becomes irrelevant when you stop following your zone.
And it sounds like what we heard on Friday, doesn't it, Rob? Trade the market, not your account.
That's it.
No, I think that's.
Yeah. I mean, you have to keep your, you can't overtrade, what your account is, but you know what I'm saying. It's what Travis said, just in a different way. Don't think about, well, I've got to have this money. It's like, well, is the market doing what I'm wanting to do in order to take this trade?
I like that. And what I've found is that when I keep things more simple, we talked the other day, I'm going to put an R and an I on the screen. One of them repeatable, one of them independent factors. When I keep things a little more simple and lean on the risk management side, a lot of that becomes repeatable. So what does that mean? Well, because all of those factors are repeatable, then in that case, it's a repeatable trade, right? So if this trade showed up tomorrow, I could take the same trade and so on and so forth, and it would be easier to scale up that way. Whereas other trades end up more, well, I'm looking at this, that, and this, so I make my decision. And that same trade probably wouldn't show up tomorrow. You would have a good trade or a good idea of what might happen, but it might not be the same trade. So what I'm trying to say is the more variables you put in, the more trailing stop strategies, the more scale in strategies, the more you really mess with your trade, the more you start to look at different variables, and the harder it will be to scale up consistently, to where our goal, especially for newer traders that we have, is to have everything in this repeatable box so that it becomes almost brainless at times. You know, those trades where you say, well, that's my trade without a doubt. I could walk away from this. That's the strategy I use. Okay, see y'all later. That's my trade. A lot of times that's because it's repeatable. Bottom line, you've seen that trade so many times exactly with the same factors that you've learned to trust it. Whereas on the independent side, you might have learned to trust your Bollingers, you might have learned to trust your EMA, you might have learned to trust your MACD, your RSI, but have you learned to trust the picture that all 8 of those together are giving you today? And everybody can answer that for themselves. I can't answer that question for you. But bottom line, when you keep things simple, if you can prove to yourself without a doubt that you can be consistently profitable and keep things simple, a lot of times that's the better way, debatably, because at that point, money will weigh less on you and you'll be more sure of exactly what you should do. Instead of question, oh, is this where I'm supposed to scale in? How big of a trailing stop should I use? Should I scale out there? What should I set as my targets? If everything's repeatable, you know your risk management, you know your trade, even if you're just a little bit profitable. So what I had to learn was that some days when I'd try to kill it, I was really in this eye box. Some days it'd work really well, but there's no guarantee that the next day would be the same. Whereas if I could keep things simple, then I could repeat that zone, and it made it a lot easier to scale up over time without having to overthink my decisions.
You know, also too, when you start adding all these variables, there's a lot more opportunity for you to make a mistake.
Agreed.
You know, so when you add all these variables, trailing stops and scale ins and scales out and all that stuff, there's just a lot more opportunity for you to make a mistake, you know, until you get good at it.
And there's also more opportunity for your emotions to weigh in, because you can talk yourself, oh, look at these Bollingers, they're showing me this. Or you can pick one factor and exaggerate it and say, that's why I got into this trade.
Yeah. Yep.
Anybody have any thoughts? Anything they want to add? Good thing we didn't squeeze this too tight or we'd be out of the trade. But again, my goal with the runner is to do my best to allow this stop to hang on to the market. So I want to allow it to take regular retracements and continue. I want to get out if I believe the move is at jeopardy, more or less. So seeing it pull down is not a reason to bail.
So if you're not an opening range trade or another type of trade right now, what kind of trade would we be looking for?
Are you asking me?
Or I could ask anybody in session too. What are they looking for right now for a trade to get into a trade? And it could be just not following those suggestions. I'm trying to get away from the word rules if we can, but those suggestions on Travis's screen. We're not telling you how you should trade. That's a suggestion. But is there something else that somebody might be looking for? And if they are looking for the suggestions that Travis has on his trade, what's the first thing that they want to have? Wow.
Clayton got it. A+. Retracement with a turnaround signal.
Thank you, Clay. Good way to go, dude.
So one thing I really like about this is that we just broke above all the EMAs, so any of them could act as support now, and it's a very common time to see an EMA bounce is the first time we break above them. So whether it's the 10, the 21, or the 89, if we turn around at one of those levels and I can clear my stop, that's a trade I'm willing to take. We've broken a new higher high. We pushed up off the 200 this morning like we talked about. Perfect place to see a good long trend start from. There's the long bias for you. So
maybe move your fib.
Sure.
Your fib tool to the top so we can see what a 50% retracement would be. There you go. Yeah. So 38, 30%. We're not quite at 30 yet, but we're getting close. Getting close to 30. And I know Mr. Titus is watching these levels pretty closely. Fib levels. They seem to be pretty accurate, these fib levels right now. So that's another thing we're working on, folks, is how fib levels taken from our daily chart can transfer over to our execution charts and possibly give us another clue to where price might like to go for levels. And a lot of times those fib levels match up really nicely with, the levels that Travis and I talk about in the mornings. And you'd be surprised how often they line up. So
I feel like the same way that price action repeats itself, it echoes loudly. I think a lot of people have said that in the past. Levels do the same thing, where I might identify a level for one reason, and then the next day I know Randy's look back and say, oh, that was an OB range from here, and somebody else might look and say, oh, that's my fib 618 from there, and it's like those levels tend to just almost recreate themselves or be relevant again to the point that somebody trading a little differently will notice them at times. I don't know how I'm trying to say that exactly, but you might see the same level for different reasons, more or less.
There you go. And again, it's not that there may not be just one way. Okay, if you don't do your levels like this, and you're not doing your levels correctly.
I mean, like the wick on the 5-minute candle that just went to last Monday's reopened and turned around.
Mm-hmm.
So, yeah. So that was to me, that was a key target. And so now we're going to see if we're going to pull back and go through it, or if I'm going to take a break.
Mm-hmm.
Do a little deeper retracement and then go back up.
I thought you were going to say dance. Do a little dance.
Yeah, that would probably horrify.
Gonna get down. Gonna get down tonight. So now it is kind of a wait and see. Not much we can do right here, and unless you're trading some fib levels, huh, Titus?
I hear you, Rob. I'll be talking in just a second.
We are at one of the fib levels right now. It looks like it's rejecting off one of the fib levels, the 14.6 fib level. I mean, that's what I'm seeing. I'm thinking he's seeing the same thing.
Yeah, it is. That's where it turned around within a point.
Yay! So I did it right, folks. I did it right. I worked this weekend on these fib levels and because one thing I do like about this fib levels that we're working on is it's very mathematical. So
you're trying to come up with a good fib, Rob? Is that what
trying to come up with a good fib, folks, that I can we can bring to the group? Titus, you're not fibbing, are you? Wait a second.
There's a lot of funny things you can say with the fib, right?
Of course. So anybody have questions? Anything anybody wants to talk about? Clarice, I talked to Clarice last night. Her numbers on the bottom of her chart are all messed up again. And we tried reloading the data like we did last time when Valerie gave us some tips on that. We tried that, did not work. So is Clarice here? I don't think Clarice is here yet. She might be.
Rob, did you notice what was on top of the opening range today?
No, because I didn't put the opening range on the fib chart, but I can. So let me.
It's the 50, the split on the fibs off of the daily. That's where the number is on the top of the opening range today.
Wow.
You might not be able to see it on your chart because the opening range is laying on top of it.
37.39.
That's what I was talking about when the opening range when it leaves.
Yeah. $37.35.
Barbara, it has nothing to do with the meaning of the word, but more to do with the fact that, let's see, how do I word that? You see the question, Rob? Why are we adverse to the word rules? The more I trade, the more I lean back on needing them, but it just has to do with a stigma attached to that word that a lot of traders might carry over from another place.
Well, not only that, but it makes it sound like if you don't trade based off of those rules that are on Travis charts, you can't trade, that you shouldn't be trading, that you're not going to be successful, that blah, blah, blah. These set of rules are Travis's rules, not mine, not yours, Barb's. Now, can you use these guidelines? we're just trying to get away from the word rules, because rules makes it sound like you can't do anything else. Like if you don't use these rules, you're not going to do well.
Right. And we were talking this morning, my job as a moderator, if you will, is not to bend somebody's trading towards mine. Like say they give me an example trade, it's not to say, well, why didn't you do blank, and blank being what Travis would have done in that trade. My job's to look at it and say, well, why did you choose this trade? What led you to believe that this was a repeatable pattern, if you will? What was your indication to get into the trade? What were factors that led you to like the trade? We can back up a step, say, did you trade with the trend? Yes or no? Did you have a strategy that fit it? Okay. Well, how did you choose your strategy? At what point did you decide two different things? So at what point did you decide that if this is your trade zone, you decided this trade was in your zone instead of out of your zone? Why? And once you decided it was in your zone, okay, let's go one step further. You decided it was in your zone. At a certain point, you have to go from not being in a trade to crossing a threshold, execution point, if you will, to being in the trade. How did you go from looking at this trade, saying it was almost my trade, and then decide at a certain point in time to cross that threshold, take that trade, have a profit and a stop, a P and an L, if you will, on it? And if you can answer those two questions for me, it's okay that it's not my zone. As long as you can tell me why it is in your zone, why you took the trade, if you will, and then show me exactly at what point that trade was worth taking and why you took the strategy you chose. If you can prove that to yourself, it's not our job, like Rob's saying, it's not our job to say, well, these are the rules, follow those, or don't do anything else. It's our job to lead you in a way to say, is your trading repeatable? And if it's repeatable and it's positive, then your job is to be so confident in your trading that it doesn't matter. If Travis shows up today and says, well, I don't really like that trade, Barbara's going to say, I don't care if you like it or not. Here's my track record, and here's the last 100 of them I took. So it is what it is at a certain point. My job isn't to tell you how to trade, but rather to just support you in different ways and say, well, is it repeatable? Could you make the same decisions? Do you like the decisions you're making? Is it something you're confident in? Why are you confident in those decisions, if you will? And that goes back on a track record. Rob likes to say the only way to play poker is to make money. Trading is the same way. The only way to trade is to make money. Well, how do you know if your trade makes money? It's not that you took a trade and filled it. It's that you have a sample size. And in order to have a sample size, you have to have a set of variables, a set of variables, if you will. But you have to have certain variables that you say, whether it's 3 variables or however many you have, but you say, if these 3 things are true, that's when I take my trade. So then you have to go and test whenever those 3 things are true over time, and you find out either A, you like it, or B, you don't. Unfortunately, more often than not, I landed on the don't like it part. I'm like, oh, this is my new thing, and I test it, and I'm like, well, that doesn't work either. And then I go to this other new thing, and I'm like, well, that doesn't work either. And I actually had...
Yeah, but what do you learn though while you're testing? It's
That's
not
just
always. Yeah, it's the peripheral. It's the things that you learn about price action when you're testing something. That may not be the trade. This may not be your savior trade, right? We're all looking for that savior trade that's going to just turn our trading around, when it's actually the trade. You've probably been doing the trade and you know the trade. Now you can add on to the trade if you want. Be an Edison. There you go.
So the reason I said that is because we had a lesson a long time ago with the Thomas Edison about the light bulb and stuff, right? And one of the, I think it was in a book or something, but one of the lectures we got was how somebody asked Thomas Edison, after trying it was like 2,000 different substances for the outside of the light bulb, as well as different gases on the inside and different, what's it called, a filament on the inside of the light bulb that burns. So he's trying all sorts of different ways to try it. And at the end of the day, somebody asked him, they're like, man, how does it feel after you failed like 2,000 times in trying to make a light bulb? Like, why are you still trying? And Edison just smiled. He said, I didn't fail 2,000 times. I tried 2,000 different ways that I now know don't make a light bulb. So he's narrowed down very, very heavily what he's going to use to actually make a light bulb. And trading is the same way. Like Rob's saying, instead of thinking you fail every time you try something, oftentimes when we try a new zone, we're not guessing as much as testing a temptation. A lot of times you'll be looking at the charts and say, man, I started to notice every time the market does X, I want to get in a trade. And then go test it. And over time, you either find out you like it or maybe you don't like it. And that's just as good, because now you know that temptation in your head that makes you want to get into the market doesn't work. And I think that's very, very important to test. I'm actually going to move my stop up a little bit now that we're cruising.
It's kind of like the temptation to just jump right in. Well, okay, go to a sim account and say jump right in and test it.
Right.
Yeah. And unfortunately, I did that live too often. That was kind of my way of testing it. let me jump in this live.
Oh, it looks like it's going
moves
up.
up.
Quick.
Yeah. And then all of a sudden it pulls back 50% in the
I-
same candle,
I think
like
that's
it's doing now. And, and you end up getting knocked out and going, oh, and then it goes up. And then you're like,
Well,
oh.
it helps you get that emotion that a trader we have listened to talks about. It says the most motivating emotion that a trader can get to keep him out of stupid stuff is disgust.
Yeah.
When you become so disgusted with trying
With your-
that,
with your
continuing to
decisions
do
you're
that,
making,
you finally say, okay, I'm not doing
Yeah.
that anymore.
Yeah. When you finally get so disgusted with your decisions, you stop doing them. Those poor decisions. And
with that.
I've been to that disgusted level quite a few times with myself. And a lot of times, you know, all of a sudden then I'll start doing well. I'll be so disgusted with myself, I'll start doing well. And then what happens? I fall back into old habits and I have to get disgusted with myself again to stop doing them. And that is a character flaw, in my opinion.
I think it's a human characteristic.
Yeah, it is.
We all
It
have
is.
that
But
flaw.
but when it comes to trading, it's a flaw.
Oh yeah,
Okay?
yeah,
Yeah, you
because-
need to fix that.
we want to
it's
learn
a
how to
flaw.
turn those things to our advantage. We know they're there, and so we turn them to our advantage.
Exactly. You know, who was it? We were listening to somebody. I was listening to somebody, and you know, reviewing your errors is as important as like, oh, we get so happy about reviewing. Look at all these trades that did great. Wow. And this is what I'm talking about, live trading, not necessarily doing a sim account or testing a trade. But when we start looking at our errors and say, why did I do that? Now, I'll bet most people in this room, if they went back to those live trades that they took and they removed those trades where they made bad decisions or made errors, they'd be pretty highly profitable. And if you're not highly profitable trading live,
I think
why
that
is
was
that?
Friday. I think that was Friday when Pax was talking.
I think that was in Pax's Spaces. If they, one of the guys there, I think it was, yeah, one of them, I think it was Leo, when he said, hey, look, if you go back and review your live trades and just take out the ones that you made a bad decision or you made a mistake, whatever the case may be. Now
you got impatient. You didn't wait for your spot.
Yeah. How does it look? Now I'll bet you're pretty profitable if we can get rid of those trades and stick to the trades that we know do us well.
Right.
But that's the hardest part of trading, isn't it?
Another
Well,
guest.
when you get serious about a sim account too, when you're testing something,
Yeah.
you're gonna have to trade that like it's live money. You know, if you get to after you get to a point with a sample size, if you don't start trading that like every loss is, you know, is legitimate, like you're losing real money, then you'll start to add little things. Go, oh, well, this ain't real money. I'm just going to try this. It's outside my rules a little bit, but I'm going to go for it. Yeah, you got to even stop that when you start simming something seriously.
You got to quiet that voice in your head, especially if you're an engineer. That, oh, I'm in this. Well, what if I did this? Well, that's fine if I thought of it before the trade.
Yeah.
Or after the trade, but not during the trade.
All right, Travis, got a nice runner here, buddy.
Yeah, it's going.
Yeah, man.
It's a 1-for-1 trade day too.
Yeah, this looks good. So
I missed the first entry, so.
Yep.
And there's
a
a stop
movement. 2-2 cross on the 60.
Any closing comments?
Yeah, one
Travis?
last thing I wanted to mention. You mentioned a Crudelli guest, and it might be the same guy. It might have been a different one, but I remember him talking about how a lot of traders over time, they learn what their zone is. So improving over time now becomes a matter of just sniping the bad trades out of their zone. And something about that phrase really stood out to me, where they're just trying to pinpoint the trades that they really shouldn't have taken, but the ones you can define why. Not just, oh, I stopped out here, so I knew I shouldn't have taken that one. But really actually look at your factors into the trade. Say, man, my stop didn't clear on this one, and I still chased that trade and it stopped out. I probably deserve that. I won't do that into the future, whatever it might be. But it really stood out to me to hear him talk about like sniping the bad trades out of your zone, if you will, just taking one at a time and trying to increase that percentage. Just 1% every couple months can be huge.
I love it. I love it. All right, folks, we're going to stop the stream. We'll keep trading, though, for our members. And come on back tonight, too. We'll be in session tonight. Well, obviously the rest of the day, but also tonight at 7 p.m. East Coast time for a couple hours. So if folks need help with their charts, or they want to have trades reviewed, come on in tonight. So again, thanks Travis, thanks Randy, Titus, Barbara, anybody who
Bernie,
chatted,
Clayton.
Bernie. Hey, thanks you guys. We could